The local market today. For more, I spoke to David Halliday from Macquarie Private Wealth. David Halliday, a big drop in home prices in the US, which saw stocks fall there. Did that hit trade in Australia?
Well, pretty much all of it. Our market was very disappointing today, down about 1.5%. The sellers were in control right from the start. As you said, the catalyst was that bad housing figure that came out in the US last night. Really, the underlying concern there isn't just the housing figure, it's all around the fact that it does look apparent now that the US is potentially looking at a double-dip recession scenario, not confirmed, but many now looking at that being a possibility. And if that indeed is the case, then that doesn't augur well for equity markets globally. Our market obviously following on from that. At the same time, throughout August, we've had what you might describe as a pretty patchy reporting season. There's been some highlights, but certainly some lowlights as well. And overall, you'd have to say it wasn't the strongest reporting season we've seen to date. So all those factors starting to weigh. We've got a hung parliament, and really there's a lot working against the market. And today we started to factor a lot of that in with a 1.5% fall.
As we heard earlier in the program, BHP's released its annual results. What's your assessment?
It's hard to judge the market reaction on this one. Obviously, the overriding issue at the moment is the takeover for potash over in Canada, and that's a $40 billion bid, as we know, and that really is what's driving sentiment at the moment. But underneath it all, BHP delivered a very solid profit figure, $12.5 billion, 45 cents dividend. That was really bang in line with the market's expectation. We were looking for exactly those numbers. The commentary certainly won't ruffle any feathers. I don't expect to see wide-ranging downgrades, but at the same time, probably not wide-ranging upgrades when analysts put their pens to paper overnight tonight and publish their research tomorrow. So in the absence of any major moves internationally, I wouldn't expect a huge move either way from BHP on the back of this profit result. Nonetheless, it was a very, very solid performance. $12.5 billion is a lot of money to make. They improved their cash position once again, so they've got a real war chest to go out and pursue potash or whatever else might pop up on their radar screen. And their outlook, while not overly bullish or upbeat, certainly was quite positive. They did point to volatility in the global economy, but certainly nothing to worry about there.
Engineering contractors Worley Parsons have suffered a sharp slide in profits. What did investors dislike about that the most?
Well, they just didn't like the profit result, really, to be honest with you. I mean, the net profit came in at $291 million. That was down 25% on the previous corresponding period. It was about $4 million below the number that we were looking for, and really that was where most of the disappointment arose. The outlook statement that the company delivered was actually quite upbeat. They said the volatility in their order book had diminished somewhat in the second half of 2011, and they saw that persisting into 2011. So from the company's perspective, you'd have to say that the outlook statement was quite positive, but it just wasn't enough to save the shares during trading today. The market really took to them with a stick. Stock was down around $2, just over $2, which equates to about a 9% fall. So a pretty disappointing performance overall there for Worley.
David Halliday, thanks for joining us.
Thank you.